Russia is a natural resources giant. As the world's largest energy exporter, it accounts for 1 in every 9 barrels of oil produced and 1 in every 6 cubic meters of natural gas. It is also the world's largest miner of nickel and palladium and a leading exporter of grains, like wheat and barley. The political standoff between Russia and the West has sent a ripple of concern through the commodities industry. I'm here in Lausanne at the FT Global Commodities Summit, where one of the main topics of debate has been the crisis in Ukraine. The commodity traders and executives here are discussing how the crisis and the sanctions on Russia will affect the country's future as a commodities powerhouse. Bob McNally, head of consultancy Rapidan Group and a former White House oil advisor, says Russia is vital to Europe's energy supply.
Russia is a powerhouse in the global energy market. On the gas side, the world's largest reserve holder and a major supplier, especially to Europe, supplying something like 30% of Europe's demand. It has diversified a bit that throughput to Europe away from Ukraine. However, there is still broad concern that sanctions could interrupt those flows.
The country is set to become even more important in global markets. The fertile region around the Black Sea is one of the few agricultural areas left in the world that analysts say has the potential to meet growing demand from Asia. In energy, despite decades of breakneck production, Russia still sits on the world's largest natural gas reserves. And the Russian metals industry, still struggling with high debt and inefficient plants, is a crucial swing producer.
All of us in the metals sector and in various other parts of production and economy have been through a difficult period of either crisis or post-crisis adaptation, which is always, as usually they say, is an opportunity. So for us it was important to focus on how we manage our costs, what structural changes we could introduce in the company so that we would be able to maintain that position and continue to be the leader in the non-ferrous production industry, both in Russia and outside.
Russia's importance as a supplier of natural resources means that few executives in the commodities industry believe an interruption of the flow of trade is possible. Even if relations with the West deteriorate further, and if Russia sells less to Europe, there will be plenty of buyers for its commodities in China.
There's been pretty much uninterrupted flow from Russia to Western Europe for 40 years. And we don't expect that the crisis will lead to a sort of shortages of delivery towards Western Europe. In the medium term, if one put it in the context of shale gas revolution, you have now the US who will become a large producer of gas, which maybe will accelerate their ability to export gas through the LNG market. This is not something which will happen overnight, but I think if you look in 5 years' time, there's a decent chance that Europe may be importing shale gas from the US, maybe shale gas from Argentina, which also has sort of large reserves, and various other countries, and that gradually the Russian will start pushing the gases to China. There's already the pipeline built, some more can be built, so it seems that irrespective of the political situation, economics might drive into that direction anyway.
But even if trade is not interrupted, further sanctions could hit the future development of the country's natural resources industry.
I think what's more likely, in the event particularly Russia decides to invade southeastern Ukraine, would be sanctions on upstream investment in the energy sector, not export restrictions on their gas and crude. Depending on the scale of the investment, it could be quite significant and quite negative for US and British and other Western companies. Exxon, of course, is a major player in the Russian Arctic and hopefully to be in the shale gas and Sakhalin. BP, same thing. And if Total joined in, also a problem for them. So in the terms of Western investment in promising frontier areas in Russia, it would be very negative for those companies and negative for Russia because they would lose capital and technology expertise and momentum that's been built up already.
The turmoil surrounding Ukraine is a powerful reminder of the close connection between politics and the world of commodities. Jack Farchy, Financial Times, Lausanne.